Okay, July 2024. It is hot outside, but the market is not that hot. So let's go take a peek and see what's happening. It's been an interesting half year so far. So this is going to be I'll keep it short and sweet. It's been a little bit slower than we expected, because we were sort of predicting the interest rates to be dropping throughout, the past years, and they haven't been. So look at these numbers. Where do you think this is going to go today, right? So if this is our active inventory, where do you think it's headed? Is it growing? Is it shrinking? Looks like it's staying fairly low. But this was right before the turn in 2022, right before a market correction. So you can't really see that coming, right? You can't predict the future, but you can sort of look for trends. So what we normally look at is, stuff that happened in the past. So what is our data telling us? The direction of things are moving. When it moves this swiftly, it's really tough to predict. You can't tell how long it's going to happen. Are you in the middle of a little blip? Or you are in the middle of a big shift? Obviously, this is a shift. It doubled twice in 7 months. But what changed before that? It was interest rates changed, so we saw that happening. So we actively saw our buyers slowing down and saying, "Whoa, this is getting out of hand. This is getting less affordable. Now I can't qualify for the house that I was looking for 6 weeks ago." Um, as a listing, you saw showing volume reduce. So you used to list it, and boom, you got 50 showings. When that reduced to 25, reduced to 10, reduced to 5. Okay, that's a indicator that something's happening out there. And then obviously offer volume comes after that, right? So if you've got 50 people coming in, you might have 10 offers. If you've got four, you might have one, hopefully. So all that stuff changed, and this is all anecdotal. This is what we get from having conversations with agents, watching how listings are behaving, seeing how open house activity is going. This is stuff that we have to watch, daily and weekly to make sure that we understand what's happening in the market. That's how we advise our clients to have a winning strategy, whether they're selling or they're buying. So real quick, we'll get into just the general. So the actives are up just barely. I mean, they've been creeping up this whole year by like 200 or 300 a week or something like that, which is pretty slow. It's just been super steady. So now we're up to 16,000 something. Gotten under contract. That's actually reduced, which has been following the disappointing trend. We're down to 7,100. Our new listings are actually coming down, and we'll get into the trend of that. Contract ratio is down. It's at 44. And then Crump for market index is also down. So all these indicators are sort of pointing to a slowing market. So if you're a seller, be ready to get aggressive and be one of those few that does go under contract, because these market conditions are sort of getting away from you. Active listings, you can see it crept up just ever so slightly all throughout this season, right? So we actually might see a turn. It really depends on if we can stabilize our demand, right, under contracts, and if we have a further reduced number of new listings going to market, right? So this is our listings under contract holding down that all-time low record, baby. So we're at 7162. We still have not beat last year or any year back to 2015 as far as our under contract volume, right? So we are continuing to be under that number. It looks like we barely crossed and met week 16. We matched 2020, but that doesn't matter. 2020 was a weird year. So here's our new listings. This is sellers that are like, oh, I'm going to list my house. We're going to see if we can get it sold, right? This is what leads to sort of this is what adds to your supply, right? This is the tap. This is the bath water turning on. It's reducing, right? So it went from 8674 to 7181. This was my question last month. I was asking the people attending our class, are we seeing a pattern, or is this just a little blip? Well, this looks like it's a continuing pattern. Now, if we see even fewer go on once we close out July, once we close out August, it's going to be clear that we have a reducing number of people listing their homes on the market, right? That'll be because either they're locked out, or the prices are not where they want to be, or it looks like the market is not in their favor and they're deciding to hold them. So we'll see how that goes. That lower supply is sort of helping prop up this number, right? So our demand is low. if we were to start jamming a bunch of supply into the market, this number would drop down and it would be really tough for sellers. But with that 16,000 listings being relatively low anyway, this is a somewhat healthy number. 44. I know it's not, what we're expecting from years previous, but it's not that bad. 44. It's not that bad for June, honestly. Interest rates continue to be sort of the catalyst, although as we're getting into the summer months, this is less cause and effect, and it's more just a slowing, a slowing market. You can see the seasonal decline to the year end. So compare this to that contract ratio to last year. We were at 73.1 this time last year, and now we're at 44. So, much slower than last year, although still not terrible. We're still in a warm market, technically. Just depends on where you're looking. So that was countywide. This is in Stetson Valley, right? In 2023 and 2024. You've got all this modulation way up just because you have a smaller set of data points. But you just have a lot more activity. It was really healthy. Honestly, it's been performing better than the metro as a whole. I know these are stretched and they look pretty ugly, but sorry. Um, if you look on the bottom, that is your average of the whole county, Maricopa County. If you look at the top, that's Stetson Valley Homeowners Association. It's about 2,600 homes, and they tend to just do better, sell quicker. It's a stronger market for sellers over the past 18 months. It hasn't always been the case. When we went into that market correction, it got really quiet up here. So it really just depends. You've got to go do the homework and figure out what your specific area is doing, how the market's behaving. Generally, Crawford Market Index points to the future, and it's looking like it's a soft drift down into a balanced market, right? Balanced is 100. We're at 102.9. So could we be balanced through the summer? Probably. We might even get below that 100 line. That doesn't necessarily mean that you're going to be in a buyer's market, but you're going to have these components of the market that give buyers a chance to be more aggressive and maybe find some opportunities. So generally, Crawford market or index is down city from city to city. Looks like Maricopa and Queen Creek had a little bit of improvement. Avondale had some improvement, but everyone else is dropping. So as we're getting into the summer, it's just looking like it's tougher and tougher for some of these homes to sell. And does that flatten out? And then this is the market that we're in for the next 6 months, or does that continue to decline? And then in 3 months and 4 months from now, when I'm making this video, are we like, okay, we're in the buyer's market? We shall see. So keep an eye on all these stats. Remember, it's always going to be local. You've got to do your homework and find out what's happening in your neighborhood, in your city, in your general area. And as always, just give us a buzz if you need us to run some analysis and help you with strategy. All right. See you next time.